Hi guys, welcome back to the channel. How you doing? If you're new to the channel, be sure to subscribe to see more videos like this one where we trade the markets the minimalist way by keeping it simple, by making a clear and simple analysis, by using clear and simple indicators. Today I'm looking at the Australian dollar US dollar on the 1 hour time frame, and to build my setup I'm using the bottom stop signal and the RSI Exhaustion, and I'm also using the levels and zones just as an extra reference in this case. I can see that on the macro point of view, the pair has been trending down quite significantly recently, but then we have what looks like a retracement, even if I believe it's going to be a major retracement or maybe an uptrend which started down here. Why I believe so? Well, because as you can see, the price is moving higher and also the RSI is moving higher. So let's see if I can, this is annoying. So okay, so the RSI is moving higher as well. So this price action here is sustained by the RSI. Moreover, what we have here is that we have one bottom here and one bottom here. So this is an opportunity to enter into the trade because we have the bottom. So we typically look at three conditions. The first one is to have divergence between the price and the RSI exhaustion. In this case, we don't have divergence, but we have a confirmation, which is different because typically we like to have divergence and the second bottom is below the first bottom, like in this case here. So you see the first bottom is here and the second bottom is down here, but the RSI increases, so the price goes down but the RSI goes up and we have divergence. In this case, instead, the second bottom is above the first bottom, and what we want to see is to have the RSI to confirm the same trend, so to sustain the up movement. And this first condition is checked because we have it. The second condition is to have the RSI exhausted, and we have it. Typically what happens in this setup is that we have the first bottom lower, which we have, and it is exhausted as well, the RSI, in coincidence with this bottom, and then we have the RSI going up, maybe even to an overbought situation like in this case, and it is also exhausted, which is excellent, and then it comes back down. And then, well, of course, in this case we had another run up and another run down, but it could have started here, our trade, so here, but we are getting the signal here, so we just take advantage of the situation here. But the point is that we want to have the exhaustion here, and we have, so the second condition is checked as well. And the third one is the simplest, which is to have a bottom, and we have. It is confirmed because at the close of the next candle, so this candle right here, the bottom is still displayed, so it is confirmed to be a bottom. You should always wait the close of the next candle. And so we can place our order. The order will look like this. So, well, the stop loss is very easy to set in this case because we want it to be just below the most recent lowest point, which is this retracement here, so it's approximately here, which is okay. And the target, we use the levels and zones. The levels and zones is saying that we have a major resistance here, so we can expect that if the price moves higher like we are expecting, it will reach this level here. What you can also do as an extra confirmation is that, or to set your target, is to take the length of the first impulse. You see one impulse here, and then project it to the upside. So you take the same length, you start from the lowest recent point and you project it to the upside. And as you can see, we end up slightly higher than my target, So it means that if you want to be a bit more aggressive, you can place it here. If you want to be a bit more conservative and enhance your likelihood of getting to the target, then you can set it to this resistance here. Let me check. The risk reward is almost 4, which is excellent. So I think I can leave the trade as it is right now. Let me also comment on this downtrend before. Well, we had a downtrend here, a major downtrend, and throughout this downtrend we had several bottoms. These were minor bottoms, and the fact that they were minor bottoms is, well, of course, because we are in a major downtrend. So you should trade these bottoms only and only if you have a very strong confirmation from a technical point of view, from the price action, from the indicators, that these are going to be very strong bottoms. But how can you exploit this situation down here and these bottoms? We have a full article on our website explaining 3 sample setups with the bottom stop signal, and the last one is an example of how you can exploit these signals, which looks like false signals, opposite signals to the major trend, and you can exploit them to your advantage and keep following the trend. So we perfectly know that the trend is your friend. So when you have a situation like this, you should I would stick to the trend, and I will trade these bottoms to the opposite side. You can read the article on our website. If instead you want to pick a bottom for what it is, then you should have a very strong confirmation. Otherwise you might lose the money because you end up in a losing trade or in a very minor opportunity. As you can see here, or maybe here, you see it is a bottom because the price goes a bit higher. It is a bottom because the price goes a bit higher, a bit higher, a bit higher. But in fact, these are just minor opportunities. Okay, so the trade is set. I'll keep you posted on this. A quick update, guys. We got a top here, but I'm not concerned because just like I was mentioning before, we are in an uptrend here and we were in a downtrend here. So I do not expect this to be a reversal point. Just like we had a top here, which was a minor opportunity, we had a top here, which was a minor opportunity. I still expect this to be a minor opportunity. I don't see any divergence with the RSI, so it's just a minor opportunity if this is going to be a natural opportunity. Otherwise, I would just trade with an opposite in the opposite direction, just like I was mentioning before. During this downtrend, I would do the same here if I were not engaged into this trade already. Luckily we got this opportunity, so I'm already into the trade. I would only get concerned if we get tops and tops and tops to the upside and see a very significant divergence with the RSI. But right now we don't have it, so it's all good. The price has now moved higher and it is now moving sideways, a little bit sideways. We got a second top, and which is a bit higher, and we are having some divergence with the RSI. So this is a little bit concerning, a little bit at least more concerning. So for the sake of safety, I just moved my stop loss to break even, since we are pretty far out of my entry price. In the worst case scenario, if the price comes back down, I close my trade with a small profit, this one here, between my entry price and this break-even point. And if instead it continues to rise, as I'm still expecting, even if we have a double top and some divergence, but if it goes up, we close the trade with almost a 4x return. Why do I still believe the price will go up? Well, as I said before, when we have this kind of setups, when you have an impulse and then kind of a small retracement, then you should expect a very likely a second impulse about the same size of the first one. So this is a bit too short for me. Moreover, we have this beautiful resistance up here, and this is like attracting the price, when you should expect that the price should move beyond this resistance. So at least at this level here, this is in between, so it helps us in attracting the price towards this level. I know it sounds counterintuitive, but you know that when you have major levels, the price will likely retest them, and in this case we have a major resistance here, so the price will likely get attracted by this level and retest it. Maybe it will go beyond and reach this higher target, and maybe even go beyond this target. I don't care and I don't know, but what I know is that we still have a very high chance of reaching our target up here. Of course, it's the whole price action is getting a little bit compromised here, but as in the previous situation when the price was going down and we had multiple bottoms, I see this as a major uptrend, and so I consider all the tops that we have as major retracements if they are. So I don't expect the price from now, from this point or this point where we are currently at, will just go down and start a major downtrend. If it is going to be a downtrend, it's going probably to be a minor downtrend. Otherwise, our initial analysis is still correct, and so we should expect to reach the target. It looks like the price wants to go lower, because you see it tried to move a little bit higher, then we got two more tops here. The RSI is decreasing, and we also got quite a substantial volatility here, but then the volatility is all gone and it's kind of moving sideways. I mean, the price wants to go lower probably, but at the same time it is attracted by this resistance up here. It is attracted by the fact that it should move at least this high before moving lower. So I don't expect the price to go down soon, even though the RSI is diverging even quite substantially. But I mean, this whole first analysis is still valid, it is still intact. I don't expect the price to go much lower than this. Of course, if it's going to go, then we are at break-even, and by the way, I moved my break-even point higher for the sake of I mean, extra safety, in the sense that if the price goes down, I take a bit more money, this much. Why did I move it here? Because I saw this volatility, and I typically don't like too much volatility when it is of this kind, where the price doesn't know where to go, either up, down, it doesn't know, and then you see what happens. This is a kind of indecision, and it's not it's not a good sign, or at least to me, I don't like this. So since we are already pretty far ahead from our entry price, we are lucky that we can play around with our break-even level, and so I'm still into the trade. I will not close the trade, but I moved the break-even level higher, so that in the worst case scenario I still take home some profits. We almost got to our target, but then the price retraced, and we are getting an hour top here. I just imagine how many traders are getting frustrated and taking their profits before reaching their target. Even if we are very close to the target, this is something you should never do, because you are compromising your profits, your overall long-term performance. This is an indication that traders are getting frustrated and they act emotionally. And in the long run, these traders are going to be losing traders, because they do not stick to their analysis. They do not stick to rationality. Our target is up here. The fact that we are approaching our target is a good indication that we will with a very high probability we will get to that. Just because we were in the sell zone here, you should not close the trade. You should always wait for the price to reach the target. We just need to wait a bit more. Maybe it's going to take like 3 more days, I don't know, but the fact that we are getting this top and another one here, but the price just keep pushing higher, it means that we will reach the target. And as I said before, this resistance is acting like an attraction. The price is getting attracted at least to this level, but probably it will also reach this level up here, because we know for sure from the past, because we have tested it over and over and over and over throughout the years. Then when we have this kind of setups, then the impulse that we should expect is approximately of the same length of the previous impulse, and so we should end up about here. We want to play conservatively, and so we stay here. It took a bit more candles, but as I expected, we got to our target. And guess what? We got all our 3.9x return. What if we closed before? What if we closed down here? We would have taken like 1-to-1 risk reward, or 1.5x return, which is less than half of what we got today. It is a very frequent situation in which most beginners traders fall into. They fall into the trap of getting emotional. They get emotional and they don't stick to their initial analysis. Once you make a clear, simple analysis, unless some fundamental evidence has arisen that makes you believe that the price will not reach your target, then you should never change your mind throughout the trade, even though it gets frustrating, even though it takes longer. But you must be patient, and with patience what you get is a 3.9x return. So guys, I hope you enjoyed the video. If you did, be sure to like it and subscribe as well if you didn't already. If you have any comment, of course, feel free to ask below, and I'll see you guys in the next video.